Yeah, what's up, guys? Welcome to Forex Success. So, guys, today, as you can see, this is Crash 500 index. That's what I'm gonna show you guys how to catch spike. If you watch this correctly, guys, this is Crash 500 index. You can see fully well how I caught the spike. So with just a single spike, I was on about $120 profit, and then I waited for it to give me another spike again. So what I'm going to be sharing with you is how to know when it's gonna spike. And firstly, guys, let me just clear out these indicators. These are for step index. Let me clear them out so that we can get into what we are here for today. So guys, if you look carefully, you'll see that I caught the spike at the very top right here. This is a very nice entry. You can see it's a perfect entry at the very top before it gave me the spike, and I waited because I know it's gonna come for another one. Then I got another spike. So that's what I'm gonna be sharing with you today, how to be able to catch spike. Crash 1000, crash 500 index, it's on profit. So let's get into the video, guys. So first thing you guys need to know is that in catching spikes, like I always say, all my trades on trading crash and boom, I always have a 9 candles stop loss level. Yeah, I can decide to leave my trade longer down 9 candles if it doesn't give me the spike, because of the price action that I see, that is the structures that I see, the key levels that I see. So what I'm trying to say is that first thing you guys need to do is, before you want to trade crash and boom, that is before you want to start catching spike, first thing you need to do, go to your higher time frame, starting from the 1 hour time frame, zoom it in so that you can see clearly what's happening in the market. Guys, please watch this carefully. Zoom it in so you can see what's happening clearly in the market. Then you take your line, you click on this on your screen. So if you are using an Android or iOS, they are all available on it. So you click on object, then take a horizontal line and mark out all the key levels that are available on your chart. This is one key level, that is a support level that became resistance, so it serves as resistant level now. So you click on not indicator, you click on object again. Guys, please watch this carefully. Click on object again, mark out another key level. This is another resistance zone right here, right there. And we got another one. Okay, let's take this first. We got another one right there, that price we actually react to. Another one right here, you can see. So I'm marking out the key levels that are going to make this market, that the market is going to react to. So this will definitely help you to catch the spike faster. Exactly. So again, I'll get the horizontal line. This is the last one, and then I will just mark out this key level. These are points where price actually reacted to before, so it is of high probability that price is going to react to them again. Exactly. So these are key levels right now that we need to watch out for. So then I'll go to my 30-minute time frame. On the same zoom level, I can still see the key levels which I just marked out. So I'm expecting price to react at this level as well, and also at the next key level that we just marked out. So if you go down to smaller time frame like the 30-minute time frame, you'll still be able to spot out more key levels. Yes. So you just still specify them. That is like this point, price is expected to react at this level. You see that, guys? So we're expecting price to react at that level when the price get there. Oh, I thought I marked that out. Okay, let me mark it again. Yeah, at this level we're expecting price to react at that level for the 30-minute time frame. So, and again, okay, and again, guys, another point is you check out from 15-minute time frame. You can see the 15 and the 30 minutes, they are quite similar in terms of levels where price can react. Those are the key levels. So you go to your 5-minute time frame, and you can see the market is actually just more like the 1-minute time frame. So for me, guys, from this 5-minute time frame, clearly shows that the market is moving on an uptrend. Look guys, it clearly shows that it's moving on an uptrend. You can see higher highs and lower lows. So seeing this stuff alone, guys, it can actually say that the higher highs and higher low is going to continue. That is to the upside. So it's a nice time to take out your trade just to be safe. But all the way, let me finish the lesson. So now we can now safely zoom out our chart. Like we all know, guys, we have already marked out the support and resistance level. So we can now go to the higher time frame and see what the market is actually doing. Guys, I'm combining price action and indicator here for your spike catching to be very much accurate. Look at it. So now we can see the market is currently on a resistance zone. You see, it actually make the move to the upside and then retraced back to the downside. You can see, so that is where we caught the spike back to this downside. So our expectation now from the 1 hour time frame, we're expecting a similar move to the downside again. So even if this market is going to continue to the up, it's going to come down for some time, something like this or like this. So this candle is going to end up being a bearish candle. So this will give me more confidence to hold this trade. Like I said, guys, higher time frame will show you what's going to happen on the smaller time frame. You can see on the 5-minute time frame, we actually was seeing it as a retracement, but for the higher time frame, which is the 1 hour time frame, actually showed it to us as a reversal. You get, guys? So now, how do you catch spike? 1 minute time frame is all you need to get this spike. I'll show you the indicators that you're going to be applying on your screen to be able to get the signal that the spike is about to come. That is after you have done everything I just showed you now to make it more faster. That is to make it more accurate. You getting it at the exact correct time. So 1 minute time frame, we'll be using the third zoom level for the strategy. Third zoom level, the indicator you're going to be needing is the average directional movement. There's the first indicator here, average directional movement. You set it on period 50 right there, and make it 2 pixel. That is the positive D. You get that, guys? Okay, so the positive DI for this star, you make the color white. That is, if your screen is white, you make it white, and you use 2 pixel for that. 2 pixel, you save, and for the positive DI, you leave it as green. Make it 2 pixel as well. Save, and the negative DI, you can use the color of your screen, which is white. That is if yours is white. Then save. You see that period 50, the positive DI green, the star and the negative DI, they're all gonna be white. So that's it. And most importantly, you need to set your levels. Just click on add levels, add levels, add levels, add again, because we're going to be needing levels 0, 5, 10, 20, add again. It's 7 levels. So the first one is 0. The second one, you're going to set it on 5, and the third one, set it on 10. The fourth, set it on 15. No, set it on 20. And the fifth, set it on 30. Okay, set it on 35. And lastly, the last two is gonna be on 0 and 0. You see, so these are the levels you just set, and you make this color to be let's take blue, then save, and done. You see, so right now we got the average directional movement on our screen, but I think we actually need to make this color look good more than this. Okay, I'm just gonna edit this and make the color more brighter. Yeah, so let me make it 3 pixels and take a better green, save, and done. Good. Okay, so guys, next indicator is gonna be commodity index. Commodity China Index. Also on indicator window 1, Commodity China Index. Make it on period 14. Apply to typical price. The levels -100, +100, star. You can use the star 2 pixel and the color green, just as you see on my screen. Save and done. So this is it. See that, guys? This is what we need right here. And lastly guys, the last indicator we're going to be needing is a moving average on period 10. Moving average, period 10, shift 0 method, simple, apply to close. The style 4 pixel. Let's use the style 4 pixel. Okay, let's just leave the color as red and save, done. So this is what we need. Okay, sometimes guys, a lot of persons actually get confused because of this commodity China index line. So for the reason of that, I'm just going to take it off right now. I'm going to take it off so that a lot of persons won't be confused because of this. So it's actually not that useful. That's the average directional movement line. So I'm just going to make it 1 pixel so it will look so small. Good. Okay, so guys, this is what we need for this strategy. We've set the indicators for the strategy already. So I'm going to explain to you how you're going to use this indicator to catch spike. Exactly. So first thing foremost, guys, that you need to understand, you can see, if you observe right carefully, guys, you can see that our key levels are actually making impact on this market. Look at it. Look at this point. Look at the key level right here. You see how it affected at that point, and again, look at it again at this point. See how it caused the spike. So it actually affects, the market actually reacts to key levels. So that's why we take that as an opportunity to catch spikes. Exactly. So good. Now, how do you catch spike using this strategy? Let's say you want to trade crash 500 index, just as it is on my screen right now. I'm going to be looking for this condition. The red moving average should cross above this green line right here. The red moving average cross above the green line at the overbought level. This is the overbought level from here. You can see. Okay, let me quickly make that more visible, guys. The -100 and the +100. So this is it, guys. You can see this is the overbought level. If the green line crosses above this line, you see that, guys. So once the red moving average crosses above this green line at the overbought level, this is the line for the overbought level, you see. So at the overbought level, it definitely means it's time to catch a spike. You can see right here, it crossed above it and then gave us a spike. That is for crash. I'll show you more examples. So this is actually why I took this set and caught the spike right here. As it crossed above, I entered and caught that spike to the downside. So every time it happens, guys, it gives us a spike. Look at the crossing above at this point, you get the spike. Very simple strategy to make money. Crossing above at this point, give you a spike. And again, at this point, you catch spike. You make money with the strategy. You can see it's not a fake. I showed you the profit that I was making, that I made with this strategy. Yeah. So seeing it from the 1 hour time frame, I can confidently hold that trade for long to give me more profit. So that's just it. Look at it again. So if you're a scalper, you don't want to hold your trade for long, you can still use this guy to make money. Look at it. Not just for crash 500, crash 1000 as well. Look at crash 1000 index. Look at how the strategy is doing well. Look, crossing right here, give you a nice spike. See that, guys? So once it crosses, it gives you a nice spike. Very nice spike. You see, so you just get in and sell. So like I always say, guys, I use 9 candles as my stop loss level. That is in case it doesn't give me the spike. So I won't have to be trading like somebody that don't have direction. You remember, guys, I always say stop loss, it's very necessary on everything you do. Always have an exit point. So that's why I say I don't risk more than 9 candles. So 9 candles is always my exit point. in case I get in too early, or in case the spike takes too long to come, after the 9 candles, I'm out. I don't care whether I lose or not. I'm just out. Definitely, the profit I'm going to make is going to be more than the losses I'm going to have. That means you are still winning as a trader. So let's check out how it works on Boom. Let's see it on Boom 500 or Boom. Okay, Boom 1000 leaders. Look at it. For this time, guys, on Boom, you just target it crossing below the 0 level. That is below this 10 level. So once the red moving average cross below the line at the oversold level, it gives you a spike. Look at it. This is a very clear confirmation. So if we were here just a minute ago, we could have caught the spike right here on this video. Nice one. But this is a downtrend, so we're gonna be exiting right here because we might be expecting it to continue. On S, we'll just probably go and do some higher time frame analysis. Exactly. So this is how the strategy works. It's a very nice strategy, guys. Look at it. Cross below gives you a very nice spike. So this strategy can be very, very profitable, both on a ranging market. Very nice. So when the market is consolidating, it can give you good profit, but when it's on a very like a high trending market, it might just give you small spikes like this. Yeah, but it's gonna spike. It might just give you small spikes like this. But when it's just consolidating or actually not trending down much, you're gonna make good money from this strategy. Look at it. Cross below gives you the very nice spike. Look at this point, crossed below, spikes to the upside. So this is why I say you guys should always mark out your key levels that is going from the 1 hour time frame. Mark out key levels that price is gonna react to, then go down to 1 minute time frame, use the strategy and make money for yourself. So I believe you guys understand everything I've explained here, and a lot of you are gonna use this to make money to the glory of God. So thank you for watching. We remain Forex Success. So if you are new yet, we're trading synthetic indices. As you can see, we're trading synthetic indices. A link to create an account is at the description of this video and also at the comment section of this video. So click on the link and create an account. Subscribe to this channel. Follow our Telegram group. The link is at the description below as well. So thank you for watching.